So if you focus on a couple of small things and you do it over and over and over, and you become really, really proficient at it.
The dealers need to realize you're not really hounding them. You're also being persistent to protect them from that exposure.
You don't need to go get a dealership that holds 50 cars and you've never sold cars before. Go get something you can put 2 or 3 or 4 cars on and graduate into it. And it's the same thing with your insurance. Your insurance is a living, breathing being. It needs to be adjusting and changing with you as you make changes in your dealership.
Sometimes guys may only have $100,000 for the dealer's open lot insurance, but they got $1 million worth of inventory. All right, welcome everybody to the Campbell Cars podcast. I'm your host, Greg Campbell. Today I have some guest, Eric Link, All-American Bonds and Insurance. How's it going today, Eric?
That's going pretty good. You know, we're busy. This time of the year is always busy, but being in Florida, all of the used car dealers, for the most part, are renewing it's the last day for renewal reason. So everybody's that hasn't already renewed is rushing to get their stuff done today. Imagine.
I actually did mine last week. I didn't wait till the last day, which is surprising for myself. I usually wait till the last day.
Well, yeah. Well, we it's not surprising.
How many dealers do you have that procrastinate till the last minute?
So in Florida, we probably handle a couple of thousand dealers in Florida, and we start sending out renewal quotes in January to everybody get going. And about 25% of them get it done between January and February, and the rest of them do it the last 2 weeks of April.
That's what threw me off because I'm from the Midwest, so I've had dealerships in Kansas and Missouri. And I just thought every state, the license expired at the end of the year.
No, there's a lot of states different. Yeah.
Yeah. So that kind of threw me for a curveball when I came to Florida, was the licenses renewed and expired in April. And I was like, what?
Yeah. I don't know why April. I don't know really why they picked April, but that's just the independent license. All the franchise guys expire in December 31. And in a lot of states, you have like monthly expirations, and you have like some, like Georgia went from every other March now to every other September for whatever reason. North Carolina has gone to a 3-year based on the month that you initially got your license. If you're an odd year, then you're an odd year. Then you're an even year, then you're even years. It's all over the board. For whatever reason, every state wants to do their own thing.
That's something I noticed too, like being from Kansas City. So basically Kansas and Missouri, the state line goes right down the middle of the city. So one side of the road you're in Kansas, one side you're in Missouri. And it's crazy, the laws and the different requirements and everything for dealers.
Mm-hmm.
So different, So
wow, but so close to each other. It's insane.
And what I'm seeing too is it's like every state has their own different requirements.
Yeah, I don't know why. I don't know why every state wants to be a little bit different. It's just, I think sometimes it has to do with just whoever has the money and the power kind of influencing things in that state to their liking. And then once it's entrenched, it's hard to change.
Yeah. Well, and it's kind of nice too. It's state regulated too, because, you're not having the federal government get into it and making like a kind of blanket requirements, So
Well, as you can see that a lot of times they get things messed up with just looking at let's say it was a year ago, they passed FinCEN, the financial crimes regulating body. They passed that the beneficial ownership record law, and then they were telling everybody you had to report by the end of the year, and then it got pushed back, and now it went to the point now you don't even have to report at all. The whole thing was
easy.
ridiculous.
So give us, I've known you for a few years now. We've done some business together. Give the audience, kind of give us an overview of like, where are you from? What's your kind of background? How did you get into the insurance business?
All right. So I'm from Orlando, Florida. I've been all over as a young person, we lived all over the country. My family was in the military, so we kind of traveled a lot and did different things. But I'm from Orlando, lived here most of my life. I had nothing to do with the auto industry before 2009. During that time, I had a friend of mine that was also kind of had his license and was dibble dabbling a little bit. And so we got together, got the license sorted, and essentially what we did was buy work trucks. In Florida during that time, there was a lot of the migrant kind of construction workers that were leaving. There was nothing being built anymore. So we would go around and buy work trucks and then just sell them at the auction. So that's kind of how we ended up in the industry. And then when that slowed down, we just kind of looked for something else to do. And I had an opportunity to kind of get into the insurance world. And from there, I didn't know really anything about it other than that's the next thing I was going to do. So I went about learning, figured it out, and just realized that this space, the insurance space for the used car market or the independent dealer marketplace, it's kind of behind the times with all other insurance. We came in, try to clean things up a little bit, make things move a little faster, add some technology early on, and just kind of kept progressing, and moving, pushing the speed to where when I first started, it would take normally just to get one insurance quote for a dealer, it'd be a week, sometimes more. And the insurance carriers are sending me Word documents to fill out, to send back to them for them to quote off of. So we brought all the information from all the different carriers and people together, created our own application so we could send it to everybody. And then we told them we want it immediately, essentially. So we shop it around, we quote it to everybody, but we want the quotes immediately. So we pushed that week down to a couple of days to eventually down, we want it in one day, to the point to eventually what we're getting is we would like to have things quoted instantly. And that's what we're pushing on now. And hopefully before the end of the year, we'll have that in the works and running. People will be able to get an insurance quote within a couple of minutes for your dealership. As long as you're not too out of the ordinary, if you're selling, dump trucks to Mexico, it might be a little bit of a different scenario, right? Versus if you're an everyday car dealer, these car dealer wholesalers selling cars, it should be relatively easy to get a quote as long as we have the information. And so that's where we're going, and we will probably be there before the end of the year.
So give me some context. How old are you now?
42.
42. And how old were you? 09. This is interesting too, because in 08, 09, I was in my mid 30s, I think,
I was
and
mid-20s.
got wiped out by the 08, 09 crash. So I always ask people kind of like, their timeline in the business and how old they were, because, that significant event took a lot of people out, which took a lot of people out of the business. And then it also created opportunities, for other people to enter the business.
Right.
So in 2009, so how old were you when you started the insurance?
So we started running the insurance agency. I decided to do it by 2013 over the Christmas kind of holiday break time period. I went and did so to get your insurance license in Florida, it's a 200-hour course, essentially. So over a couple of weeks time frame, I went and took the course, did all that stuff. You have to go and take a test, got the test. So by January 1, fucking rolling. Still didn't know anything about what a garage liability policy was at that point, but I knew that I was going to figure it out, just like I had done things in the past, and learn on the way. And then, it's just like anything else. If you focus on a couple of small things and you do it over and over and over, you become really, really proficient at it. So that's essentially what we did. We focused on one industry, on one type of insurance, and that's it. And over the years, we've kind of broadened out into the construction world, into a couple of other industries. But even there, it's a handful of industries that we operate in, and that's it. And we just do the same thing over and over and over and over and over as fast as we can, with as much proficiency as we can, to be able to compete with the other insurance agents. Because there's insurance agents out there all over the place, right? Every corner of the insurance agent, some sort. But we don't write homeowners. We don't do auto insurance for your personal automobile. We don't have health insurance, any of that stuff. We just focus on a couple of things, and that's it. We just do a lot of it, from Alaska to Florida.
I'm a big proponent on that. A guy in the car business, kind of one of my big brothers that in the car business when I was younger. I'll never forget. He told me one time. He said, "Stick to what you know," and it's so easy to get. There's so many opportunities and so many different ways of making money and so many, shiny objects that it's hard. That, the hardest thing is to do what you said. Find the one thing, lock down on that, and do it the best you can, and then just figure it out, and then just do it again and again and again. And I think that's a big problem with people in the car business or in any business in general. There's, like I said, there's universal laws in any type of business.
Yeah.
And that's definitely a major thing that plays in the car business because I've done it myself. You know, I was trying to wholesale, trying to sell for cash, trying to do buy here, pay here, trying to do subprime. And that, I was actually doing all that in the 0809 crash. And that was another reason why I got wiped out. I just had too many things go on, too many different directions. I wasn't doing any of them like really, really well. Um, so yeah, that was kind of a big learning lesson for me, which that's what I've noticed about you in, 34 years of being in the business. I've had insurance obviously for 34 years, and I've had, several agents and dealt with, different states and everything. You're the first person that I've seen that's kind of taken that to the next level. Like you, when we talked about renewals, dude, I was telling you the other day, like I get two, three, it seems like five emails a day from your company. Hey, you're due for renewal, you're due for renewal, you're due for renewal. And then I'm getting phone calls, and then you know what I mean? And I'm like, man, they got their, they're on top of their game. Like where did you learn that from? Where did that come from?
I would say there's a couple of things probably that we've done. First of all, just kind of on a broader spectrum, on the focusing on the one thing. For me, I've always been successful with that. No matter what other business industry, the other things we are in or have been in the past, we just focus in and do one thing many, many, many times instead of doing many things at one time, right? But in terms of the follow-up process, I've always known, and you've probably seen this if you've done any other marketing, is you got to touch people like 5 times before they actually respond to you, right? And then so once we get you, over the years, other agents out there have started seeing this and copied what we did in terms of the marketing aspect of it. And so, in order to beat them, we just got to do a better job, right? So then we can get the customer, just like now anybody can potentially get the customer, but then it comes afterwards, what you do after the fact, and keeping the customer. Because if you stay with us and you renew with us, and we're going to have a much higher retention rate, in which I don't have to then go and spend revenue dollars to acquire a new customer, right? If I can maintain you as a customer, I don't have to acquire new ones. So we spend a lot of time on kind of the process and the touch points throughout the life cycle of whether it's a policy, broad liability policy, or a surety bond, to make sure that we're getting you along the way. On the surety side, we have a system set up by my marketing team that on the surety side, we're reaching out to you 5 months ahead of time, letting you know, hey, your surety bond's coming up on this day. We're going to reach out and touch you every single month as it gets closer. Then when you get down to like the 3 month, then we're going to reach out every 3 weeks or 2 weeks or whatever. And we just set it up and keep touching all the way up until you expire. And then the day after you expire, like, hey, you're expired, but give us a call. We'll write you a new one, right? So, you didn't renew in time or whatever it is. We can still renew it if you give us a call in the next week or whatever. And then we do the same thing on the insurance, right? So we have a combination of some of it is done via automated emails that we kind of set up like an email chain essentially, or a drip chain to send you emails along the process based on your expiration date. And then in between that, because emails cannot always work, so you get a phone call from us. So you actually talk to a human, a person, but hey, we've sent you already 2 emails, right? Now we're talking on the phone and you don't respond. So then we might even send you a text, right? If you're opted into the text. And but the whole thing is set up because along the way, I'm sure you've gotten emails or phone calls from competitors of mine trying to
Oh, yeah,
get you to
I, I,
get
I
forward.
send I send a lot of them to you. I'm like, hey, you
Yeah,
know
yeah,
those
yeah.
people?
Well, I'm not reaching out to you, and you just happen to want to do it on Monday, and I'm not reaching out to you. Then whoever calls you, that's who you're going to end up renewing with, right? Because if you don't have a personal relationship with me, it doesn't matter. So I can try to stay on top of you. And we have a team of humans that all they do is make phone calls and follow up with people. Then we have a team that sets up the digital follow-ups, the emails, the voicemails, the text messages, all these kind of things. And we try to make sure that we're reaching out to you on a monthly and eventually a bi-weekly and eventually a weekly basis until your renewal date. And we kind of hone that in because we didn't used to do it as much. What we used to find is that if maybe we reach out to you 4 months out or something like this, and then I don't talk to you till month 2 before your renewal, Well, somebody called you in the middle of month three and you went with them because you thought it was me, right? And so now we just constantly hit you and bang you up with it. And some people don't like it. And then we'll change it and say, hey, don't call this person until this date. You don't want to be annoying, right? But as a business owner, I know that I get pulled in a lot of different directions
Yeah.
and a lot of things are happening. And I appreciate the people that I do business with that are out there pestering me and saying, hey, I need you to do this. Hey, I know you're busy. I need you to stop what you're doing and renew your this, or we'll pay this month of bill was, your debit card expired on file, so we need you to update it right now. I know I appreciate those, even though it can get annoying sometimes, right? But I appreciate it because I know I need to get it done. And I just assume most business owners are like that also. You're getting pulled in a lot of directions.
And here's the thing too, for insurance and bonding as a dealer, right? It's not like my Carfax subscription. Like if it's up for renewal or I didn't make my payment or whatever, they cancel it, it's not going to affect me. But if my insurance lapses or my bond lapses and I get cars stolen in an accident that happened, now all of a sudden it's a big deal.
Mhm.
And the dealers need to realize you're not really hounding them. You're also, you know, being persistent to protect them from that exposure because they don't renew. My policy expires today and I go out and get a crash tomorrow. I can't call you up and say, hey, Eric, I'll pay for my insurance from yesterday. And you're like, dude, it was expired. Like,
Yeah, you should have renewed it 2 days ago when I told you were expiring tomorrow.
yeah.
Yeah.
I
Yeah,
mean,
no, we get those. We still get those. We get people that some of them are legitimate, and we get others that will not renew their insurance on Friday, send us an email over the weekend to adjust it and resend them a new quote on Monday. And then magically on Sunday they had a fire that burned down all their building and all their cars.
yeah.
I'm like, well, something's not right here, buddy. So that happens also, but you just do the best you can. And then we have made mistakes in the past. And when we have, one particular dealer is a local guy here in Orlando. He made his payment and everything got sorted correctly. We necessarily didn't do anything wrong, but the insurance carrier made a mistake and didn't renew his insurance, I forget exactly the scenario, but for whatever reason, he didn't have coverage for his vehicles. But he asked for it, he paid for it, we set it up, but the insurance company just didn't do something for the exact scenario. He ended up having a vehicle stolen, right? Luckily the police recovered the vehicle during that time, and basically what I did with him, I said, hey, look, I realize it's not our fault, but I'll help you out. How much is the vehicle? Let's figure out what it is. Let's buy the vehicle back. We'll fix it. I'll help cover the cost to fix it and then we'll sell it. And when we sell the vehicle, if there's a profit, we'll split the profit. If it's a loss, I'll cover up your loss. You know what I mean? Just to be a good steward because he's our customer. We want to take care of him. You know what I mean? And it ended up in the positive. We both made a couple $1,000 off. It was a good deal. But even though it's not our fault, we want to do the right thing by the customer as much as we can, right? And if it is our fault, we'll take responsibility for it.
So in that situation, would that not be on the carrier? Even they made the mistake, or what? How does that? Because I know my mom had insurance. This was on a personal side, not a commercial side, but she had a similar scenario to this and had a claim, and they found all the documentation and everything was right. She was right. She paid for it, whatever, and they just didn't cover it in the declaration or whatever. And they ended up making it right. The company did because it was their mistake and her mistake. So, like in this case, is it different because it's commercial?
No, it shouldn't be different. I think in this circumstance, there was like an exclusion for theft if you didn't have protection on the lot, right, where it was at. But this particular vehicle, well, he did have protection. This particular vehicle was left like in the front because the mechanic was working on it. It was like a big box truck, right? It wasn't like a regular car. And he didn't leave it inside the fenced-in area. And then he ended up going, I think he is from I want to say that he's either from like Nigeria, one of the African countries, right? And he was out of the country for like a month, and the truck got stolen while he was gone. I don't know why exactly. I wasn't there. I'm just going based on his word and what he says. I have to believe him because he's been pretty honest with me for everything else. The insurance company said that they are not covering because it wasn't protected in the area, and it's going to be excluded from theft coverage because of that purpose. And I just thought that was not right, to be honest. And whether we were at fault or not, I don't believe we were, but it's better just to do what's right by the customer instead of saying, sorry, man, get a lawyer and sue me. Let's just do what's right. We'll help you out. We'll take care of it. The vehicle got recovered. We fixed the issue, sold it.
That's what that's what I appreciate about you and our, from a business standpoint, because I'm the same way. I'm a relationship guy. I'm always a long view person. You know, hey, it may cost me a little bit of money today, but if I earn that person's trust
Yeah.
and the long lifespan of the business, it's going to work itself out. That's one thing, and then the other is your fulfillment. I think in the industry, some experiences I've had in the past in the industry, in the insurance, but also just in other businesses in general. Like, they'll hound you to sell you something, but then they don't fulfill and live up to your expectations and take care of you. And that's what's always, frustrating to me,
I
right?
agree.
But that's something I can definitely say about anything that I've ever had a question on, an issue, whatever it was. You've always, like, boom, got me the answer, got me the person, connected me with somebody at your office. There's never been a time where we can't call somebody at your office, shoot an email. Like, to me, in my world, time is money and headaches are money. And it's like sometimes you may have, I may be getting Joe Blow's insurance, like, hey, I'll beat his rate or whatever. And I'm just no, yeah. I mean, number one, it's gonna be hard to beat your rate. And number two, you're not gonna beat the customer service and the ease of doing business. Like, even if they were cheaper, I wouldn't leave. You know what I mean? Because I just know I don't have to worry about it, and you've got it all handled. And that's the way I've built my business. And so I would say that, how many years have you been doing the insurance? Had your own agency?
Uh, that's 13, so that's 12, 12, 13 years now.
Yeah. And what's your retention rate?
We're at like 90%.
Yeah.
If we start falling below 90%, I start walking around the office here and find out what's going on. Like, why are we losing people? The only real way we lose people is occasionally people go out of business, right?
Yep.
So we lose people who go out of business. Some people, there's in other states, there's like a couple other states, there's like American Insurance or something like this, or like there's another similar kind of name. And so they'll email them or they'll call them like, oh, I thought that was you guys, and it wasn't. And like, all right, like you already renewed your bond with them. It's not a big deal. It's okay. We'll get you next year. And then occasionally, we actually get this quite often, is people will tell us that they got a quote from somebody else that's X amount of dollars cheaper, whatever it is, bond or insurance or whatever the case may be. And then they go to buy it and they're like, oh, we haven't actually done the underwriting yet. This is just kind of the rate that we give. We say to people, this is kind of the marketing rate. They're like, I told you, man. I told you they were not going to, there's no way they're going to give you that rate. I'm telling you now, I looked at all your stuff, there's zero possibility. But they don't believe us sometimes and they go and then they'll call back. But now they've had a lapse in coverage. So now there's a little bit of a problem. The DMV or the state's asking about why there's a time that their insurance was expired or their bond that wasn't effective or whatever the case may be. But most of the time, that's what it is. We do occasionally get customers that sometimes are just, whatever reason. Let's say let's say on their bond, they've had a hit to their credit. Maybe they've got, they're maxed out on all the credit lines or something like this. And so they want the rate that's for like your top tier people. If you've been in business 30 years and you have reasonably good credit and you're not a risk, we're going to give you the cheapest rate possible. But if you're maxed out on $150,000 worth of credit cards, well, yeah, your credit's starting to take a hit. There's some red flags there. You might get a little bit higher rate, and they'll say that they're going to get a better rate somewhere else, and then eventually they come back. They realize it's not.
So, the purpose of my podcast is to educate the dealers, educate the people, people that may be interested in getting the business, people that are in the business. I built my training and education program based off of my experience. and it's targeted towards people that have never been in the business. And the main thing is the mistakes, the learning lessons that you have to go through to make it to be successful in this business. And it's always the things that you don't think about. Everybody thinks, oh, I'm just going to get a dealer license. I'm going to go to the auction and they're giving cars away for free and I'm just going to sell them and I'm going to make a bunch of money. Right.
Yeah. Right.
So this kind of a two-part thing. So we'll get into the dealer school next. But what is, for new dealers, what are some of the biggest misconceptions when you have new dealers coming to you? What's the biggest misconceptions or misunderstandings they have about bond
Uh, first thing is, just before that, the funny part that we get all the time is, oh yeah, I just want to get my auction license. What do you mean your auction license? I mean, auction? No, I just want to go buy cars, for cheap and to be able to sell them to people. Like, that's not how it works. That's, you probably should do some more research. But a lot of dealers, new dealers especially, they get their bond and their insurance together or confused, and they say, "I need my bonding insurance," right? And really, well, bond is insurance. Technically, it's a type of insurance. It's actually really two different things, right? And then a lot of people misunderstand that on an insurance policy, it's very, very much what you think of an insurance policy. You pay a premium, you have X amount of coverage. If there's a claim, as long as all your ducks are in a row, the insurance company is going to pay your claim for you, and you're going to be protected, and everything's going to be good to go. The difference on a bond is it's actually the other side. The bond is really not there for you. The bond is there to protect other people that you do business with, customers, auctions, financial institutions, and so forth. If you don't do the right thing, if you don't follow the rules and regulations of the industry or whatever contracts you have with people, then they're going to be made whole. So a bond is more like a line of credit. And so the biggest confusion that we get with most people is they don't understand what a bond is. Most people have never heard of a bond other than a bail bond, right? So, yeah,
Which
and
one
those
of
people,
paid those?
yeah. So we don't do any bail bonds. We don't deal with that at all. But a lot of times they misunderstand what a bond actually does, and they think that it's going to be for them, and it's really not. It's really to prevent them from doing things they shouldn't do or making mistakes or purposely, screwing people. To be able to make those people whole financially. And then what they really don't understand is that you're personally guaranteeing. If they think a lot of time it's if they just shut down their dealership, if there's a bond claim, they just close their dealership, then they're going to get away scot-free. But that's not the case. On a bond, you're personally guaranteeing the bond, or whoever signs for it, whoever is the owner of the company. Oftentimes, dealers will use their wives as the owner, and sometimes that can blow up in their face too. And that person is personally guaranteeing that they're going to pay the bond company back if there's a claim paid out, on top of whatever fees they have for legal and other things that they go through as well. So, we're dealing with a couple right now that are real shenanigans. One dealer went out of business. He bought a car from the auction, decided he's not going to pay the auction, closed down his dealership, and now the auction's coming after him for the money. And they make a bond claim, it's almost a green light, for them to get paid, because usually the auction has all their ducks in a row and everything, all their paperwork is correct. On the flip side, we're dealing with another claim for in Utah. There's a credit union that is just wanting the title on the vehicle that they financed, and the dealer is not providing the title, but he's not providing the title because the auction IAA is not providing the title to him. So there's like a little bit of an issue there, and they're luckily communicating and working it out. Versus the other guy just thinks he can just walk away, and the bond company, unfortunately, on that instance, it's his wife that's on the bond and not him. It's that one's going to be a little sticky, but it is what it is. But that's a big misconception. That's a big issue a lot of times with dealers. Other things that they come in that, in my experience for used car new dealers coming in, is a lot of times they'll go with too much. If you're a small guy, small dealership, you're selling onesie twosies here and there, you got a little location, you're retired, just kind of doing it for fun or something like this, and you're going out and you're getting sold, $2 million worth of liability insurance and all this insured motorists and all these other add-ons that you can get from insurance companies, you're going to end up paying $10,000, $15,000 a year in insurance, when in reality, you don't have $10,000 or $15,000 to lose. You know what I mean? Like, you don't need the Mac Daddy insurance, so to speak. You can start small and graduate up. And I kind of explain that to them on all the things. You don't need to go get a dealership that holds 50 cars when you've never sold cars before. Go get something you can put 2 or 3 or 4 cars on and graduate into it. And it's the same thing with your insurance, right? Your bond is pretty much static across the board. You can't change that. But your insurance, graduate into it as you progress and get bigger, and you have employees and you have people coming on your location to buy cars and so forth. Increase your insurance as your business grows. And so they make that mistake pretty often as well.
So that's Yeah, as you're saying that, I'm thinking from my past experience when I first got in the business, that we were just trying to buy the cheapest insurance as possible. So
Right.
I kind of see. So what you're talking about is, let's say I'm new, I don't know any better. I go to Joe's Insurance, and he tries to sell me a bunch of stuff that I don't need. Is that what you're saying? And then the people end up buying more insurance than they actually need because the agent was selling it to them, or because they're requesting it, because most dealers are pretty tight, so they want the cheapest thing possible, right? So
I think there's a conversation that you have to have with the right. So let's say that I'm retired, I sell all of my stuff, sell my insurance, I pay, sell real estate, all the stuff like that, right? So I'm sitting on, let's say I'm sitting on $1 million in the bank. Now I want to go out and start a dealership. Well, if I have assets to lose, well, I'm probably going to get $1 million for whole liability and have some coverage. And I don't need every little thing, right? But I'm going to get some coverage because I have assets, right? If you're a small guy with nothing to lose, you don't need to get $1 million, $2 million, or $3 million worth of insurance until you kind of grow into it. Get a smaller amount. And a lot of times that's pushed on, sometimes that's pushed onto them by the agent, right? And the agent's telling them, well, yeah, you need to have this and this and this. And there's parts of the policy that are really going to pay out that often, almost never. And it just gets added on to pad the premium, so to speak. And I think that's kind of doing a disservice to them, right? Because the consumer doesn't know any different. And so the conversation is they had with the customer, with the dealer, and saying, hey, here's what you're covered for. Here's the potential risks that you're not covered for. Are you okay with that risk, or do you want to have coverage for that risk? Because either way, you're technically kind of insured, right? It's whether you insure it personally and take a risk on yourself, or you're going to let the insurance company take on the risk and be willing to pay the premium for that. So I think it happens in two ways. Number one, the consumer doesn't know anything and they just get talked into a bunch of stuff by the insurance agent, because also the insurance agent doesn't write a lot of it and they don't know what that, those things never really pay out on that particular part of it, right? And number two, a lot of times dealers will go to these nice locations, which is great, right? You want to have a nice location for a dealership, but then the landlord is going to say, well, you got to have this, 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 you got all this insurance to be in that location. And maybe you don't need to start there. Maybe you need to start somewhere a little less fancy, a little smaller location, because you've never done this before, you know, and then graduate into it as you get better at it and learn. You may see in 6 months that you can't sell cars, and now you just wasted all this money. Well, start small, grow into it. And that's kind of how we encourage them a lot to do it. But the perpetration usually is on the insurance agent's side or a lawyer, which if I get it, they're trying to mitigate risk. But I believe that you should tell the dealer, here's the coverages that you have as option. Here's the costs. What risk do you want to take on? What risk do you want to pass on to the insurance carrier? And then educate them a little bit. Let them make an educated decision on what they want.
yeah, I think that's what I've said. That that's another purpose of mine behind kind of where I'm at with what I'm doing is, the car industry, some industries kind of has a bad reputation, right? I feel that, when I first got in the business, I thought it was because people were like evil and greedy and shady. Now I'm like, I think it's more a lot of people just don't know what they're doing. And it's not that they're trying to take advantage of you. It's just they're just not educated. They don't know what you're doing, which would be the similar case from what you're saying. Like an insurance agent that maybe hasn't been in the business for very long or doesn't know what they're doing. They're not necessarily trying to get one over on the dealer or the customer. They just don't know exactly what they're doing and how to structure the deal and what's best for the dealers. That's what I always tell people. It's like, hey, do a little bit of research yourself and get semi-educated, but learn how to ask the right questions. Just don't take somebody's word for it. Obviously, when I talked to you, I was like, okay, I knew right off the bat this guy knows what he's doing, right? So now I trust your decision, and now I'm asking you, how would you structure this? What do I need, and how should it be structured? Because even remember in my case, I had a landlord that had some crazy liability limits. I've had that twice in my career, where these landlords that have a bunch of money make you carry these crazy liability limits, even though they have all this crazy insurance. They want to put the burden on you. And I even had one time that wanted me to write a liability insurance limit that was higher than my agent. He's like, I've never written one for that in my life.
Yeah, that's often. That
It,
happens occasionally.
Yeah.
Usually it's because they got a lawyer and that lawyer just told them to do this. And,
Yeah.
there's one thing that sticks out that was some that's kind of up perfectly is uh, there's a coverage called dealer's open lot or DOL. Essentially, what it is physical damage for your inventory as a dealer. It covers tickets that happen to your cars, not other people, not liability in it. It's what your cars are protected under. And let's say you're selling, before, not that there's really a $2,000 car anymore, but like let's say you're selling a $2,000 cars, right? Or you don't have a lot of money into your cars. Well, pretty much every insurance carrier has $1,000 deductible on physical damage coverage. So if you're selling $2,000 cars and you got all these vehicles covered under the physical damage, and you lose one, maybe one gets stolen and it burns up because you got a bad mechanic or whatever the case may be. Well, you're gonna have $1,000 deductible on that $2,000 car. Does that make sense to have your cars covered under that? That doesn't make any sense. Why would you pay for all this coverage? And you're going to pay 50% of the value of the vehicle in the deductible. Maybe you should just, take steps to make sure you mitigate the risk of your vehicles. And if you lose one, you just take the hit, because if
I
you,
I used to do that earlier, and it was Kansas or Missouri. We were required to have uh, dealers open lot insurance,
right,
but for years, if it was a cheap car and it had an accident or it had something, dude, I just ate it. It was for just to eat it. Explain to people too. This is the dealer insurance. Your deductible is not. Let's say you have tornado insurance or hurricane insurance. 20 cars on your lot, and all 20 of them get damaged. When you go to make a claim, that deductible is not just $1,000 deductible on all 20 cars. It's per car. That's correct, right?
yeah. Well, different carriers do it a little differently, and the type of damage changes the deductible. If it's, let's say it's collision, let's say your front line gets taken out by a drunk driver or something like this, right? That's collision claim. So that's going to have a 1,000 per vehicle deductible with a maximum of 5,000. So you're going to pay 5 deductibles and then the cap. However, most of the time, if you have any kind of storm damage like hurricane, hail, wind, any of that stuff, it's going to have $1,000 deductible with no cap. So every single one of those vehicles is going to have $1,000 deductible, right? Maybe worth it in that sense, because then you might lose all your inventory, right? That might be a problem, right? But let's say you're losing one, like you said, it makes more sense just to take the hit, write it off, and move on, instead of writing $1,000 check on the deductible and then having a claim on your insurance. Now your insurance rates go up, right? This doesn't make any logical sense. If you're selling a $50,000 car and you have a claim, now that changes things, right?
Yeah.
So,
Well, and I think that's two things that people wouldn't know is the deductibles, like you said, some is for every car and some has a cap. So that makes a difference, right? So
okay, so,
you need that information. And then the other thing is like, let's say you're selling $50,000 cars and you've got 20 of them on the lot, right? So your dealer's open lot, you want to have enough to cover the cars versus if you're selling cheap cars and you had $1 million dealer open lot, but you only had $50,000 worth of cars, you're over covered versus the opposite. Sometimes guys may only have, 100,000 worth of dealers open lot insurance, but they got $1 million worth of inventory.
yeah. So every single insurance carrier has the same clause in their policy called co-insurance. And every one of them has a 100% co-insurance requirement, which basically means if you have $1 million in inventory, whether it's on floor plan or it's your grandma's money or you borrowed money from your 401k or whatever the case may be, however many dollars you have on your lot needs to be covered 100%. And if you're not, you're going to have a co-insurance penalty. So let's say you have a $50,000 car stolen and you're only, let's say, for example, ease of numbers, you got $100,000 in inventory, right? But you only have $50,000 in coverage. You're 50% insured, right? So if you have a $50,000 car stolen at that point and you only have 50% worth of coverage, well, now they're going to put a payout penalty, a insurance penalty on your claim, and they're only going to pay you 50%, right? You're not going to get the whole payout of the vehicle. So that's the big issue. Some of that stems from dealers wanting to be cheap and learning. They kind of learn over the years, like, oh, I can just tell them whatever, right? Until they have a claim, and then they realize some of that issue stems from like floor plan companies that tell them they only need to have 66% coverage on their inventory, which in reality, it's not the way it's written. It's 100%, right? And so that we tell them all the time, hey, you want to be as close to your high watermark as possible, right? Going from 100,000 to 150,000 is not a lot of cost, but can be a lot if you have a claim, right? You can save yourself a little bit of money if you have a claim. So, and then it's variable, right? On your insurance, it's not as much anymore, but there used to be a big tax season. I remember the days the dealers would go up from having like 10 cars on the lot and having 100, right? Just for the tax season. That's not really the case anymore. So, but when your inventory swells for tax season, you call your agent up and say, hey, we got 500,000 on the lot now. I need to increase my physical damage. You pay for the change in insurance. And then whenever that time is over and you go back down to 100,000 on the lot, then you just pay you get a decrease and you get a return premium.
So that's something too, I think that people need to realize, or dealers or new dealers, being in communication with your insurance agent. It's not
Yeah.
just hey, here's my policy, see you next year type deal. Because you may have, like me, I'm, add drivers, have drivers, people
Yep.
get fired, whatever, inventory increases. So, just because we write a policy today and here's the terms doesn't mean that I can't call you up in a couple weeks and say, hey, uh, we need to bump this up, we need to lower this, we need to make some changes. It's everything's flexible during the term of the policy, right?
Yeah, yeah. So if we clarify a couple of things, make sure to understand that in your bond, you're not changing. Your bond is stagnant. It stays that way. You don't change it unless you're changing addresses or something like that. You don't do anything in your bond. It just stays there and you hope you never use it. Your insurance is a living, breathing being. It needs to be adjusting and changing with you as you make changes in your dealership. So a couple of common ones are adding employees and removing employees, hiring and firing. Everybody that works for you needs to be listed on their insurance policy, right? Whether they're a contractor or a 1099 or whatever you call them, you want to call them whatever, doesn't matter. If they don't have their own company with their own insurance and they're working with you, they need to be listed on their policy. And then you fire them, you remove them. If you increase your inventory, you need to call us and let us know. If you want to get more dealer plates and increase the number of dealer plates you have in rotation, you got to call us and let us know, right? You got to add that to your insurance. If you change locations, I can't tell you how many times we get dealers coming in for the renewal. We've been emailing them for 6 months. They never told us, hey, oh no, that's my old address. What do you mean that's your old address? We talked for a couple months ago. Wouldn't you think you should tell me this? So
Well,
this feels a little bit important.
what I think about is, just here a couple years ago, I tagged and insured a personal vehicle for the first time in 30 years. And now I can see how uh, people would think, like my regular insurance, they give me the quote, that's what it is for the year. I pay it all, or I pay a monthly payment or whatever. That's it.
You don't
There's
ever
no
talk.
changing it. It is what it is. That's the amount. And unless I cancel it or whatever, it is what it is. So I think that would probably be maybe some of the misconception or uneducated part of a person, because that's what they're used to. And dealer
Yeah.
insurance is a whole different,
Well, dealer insurance, it's just any commercial insurance.
yeah, commercial, anything.
Anytime you have a business and you have insurance, you need to be communicating with your agent just like you communicate with your accountant, just like you communicate with your attorney if you have one, on a frequent basis. I would say the quarterly, just touch base. When we try to touch base with everybody quarterly, hey, is anything changed? No, okay, great. And oftentimes that's just us seeing them at the auction. We'll see you at the auction, or we'll see you at at a convention, a dealer convention or something somewhere, and just kind of touch base with what's going on, anything changed. Quick text message was fine. We'll frequently have dealers just text us, hey, I hired this guy. Here's his driver's license. Please add him on the policy. No problem. That's fine. You know what I mean?
Well, cool. That want to get in the dealer school now,
Okay.
because we're talking a lot about people just getting in the business. Um, that's why I created my program too, is for people getting in the business that don't know anything, which is pretty crazy, because I've seen you know how many people come and go in the business, and it's usually because what I've seen is there's no kind of education, there's no kind of training or course or test or anything. Like, in the old days, you used to just go get your license. Here's the checklist. You need to place a business, you need a bond, you need insurance, and a phone or whatever it is, and Just pay your fee and that's it. Like
Dang, we're a dealer. Let's go.
anybody can get a license, right? Which is crazy. So now they've started dealer schools, and you have, you're in multi states with insurance and also dealer schools, correct?
Yeah, so on the bonding and insurance side, we have the ability to write in every single state. There are a few states we don't do business in just because we've had a lot of issues just with unhonest people right there. So we just kind of there's enough business in every other state that we don't have to do business there, right? So we just don't do it. On the dealer school side, it all started because as an insurance agent, I wanted to market to the people at inception, right? It's much harder to go and get a dealer to switch to me versus I find you at inception and I explain everything to you. I teach you, and now we have a trust built, and you then in turn use us for your insurance. So we got involved in a number of states with the dealer association for that state or whatever entity was offering the education requirement that's required by the state. And we would go back when everything was in person. We would go and we would be in the class, speak for 30, 40 minutes or so, and not sell, but teach them about what the requirement is and what each type of insurance thing is, what it covers, what it doesn't cover, and give them kind of, a little framework of what they need to be thinking about and what they need to do. In turn, they would then buy their insurance from us, right? And that was kind of our marketing strategy. Over the years, we've fallen into the position where after sitting through hundreds of these classes, I now became an expert on what it means to be a dealer and how to operate it, what not to do, and how to get your license and all these things. And, we just kind of fell into it during the COVID years. One of the operators that was operating the dealer school got sick and was wanting to get out. And instead of him just shutting it down, we just bought it school from him, kind of kept his legacy intact and kept it running and kept it going. And then I came in with the normal thing that I did, to figure out how to do it better, right?
Yep.
And so we then went along, figured out, made it better, made the video content better, made the educational pieces better, got other vendors involved to explain things that dealers really need to understand that they weren't getting the education from before. And kind of brought our arms around the whole part of the education department, right? At least getting your license. A little bit different than what you're doing, whereas you're educating once they got the license, this is how you survive as a dealer and how you make money, right? And so we got involved in Florida with the state association, with a couple of our other organizations. And then I just kind of found out that there were other dealer school owners that were in the same position that were getting older. They've been doing it for 20 years or whatever. They're in their 60s. They're getting retired. And we kind of just offered them, we'll roll it up into this. We're already doing it. It's an easy thing. And we'll make sure that you make some money for the next couple of years and we're good to go. And then we kind of got a name for ourselves where other people from other states that were operating dealer schools in those their respective states, they would reach out to us saying, hey, you want to do it for us too?
Yeah.
And rolled and rolled and rolled to the point now where we handle not all, but most of the education in Florida, mostly of the education in North and South Carolina, majority of the education in Utah. And then you and I connected with the Dealer Association in Missouri, and we kind of took that off his hands and kind of brought his education up a little bit more modernized and so forth, so he could focus on the interaction of the dealers in the association and not so much on having to do the education, because he was getting beat by another guy that was doing the same thing, right? Technology came into play and kind of was starting to eat away at his position in the industry. And so we now are, I believe, is 7 states that we offer the education in.
And I had Terry on the podcast, we were talking about that. He's still talking about his retirement.
Hey, he's been working hard for a long time.
Yeah, but and he's not and that's kind of the thing too, where you at 42 versus him at 60s or whatever, like the tech side of it, everything's shifting in the tech side of it. That was his thing. He did the in-person, now everything's going online, and I even tried helping him with that. And then that's when I came to you and I was like, Eric, you gotta help us out with this deal. And like, dude, you did it 10 times faster and 10 times better than we could have ever done it.
I think a lot of it is let me be honest, is I think the in-person is actually better.
Right.
If you have the ability to do an education in person where you can ask questions and interact in a group, no matter what the industry, it's always better. But that's not really the way of the world anymore as much as we want it to be. So if you're going to have to go online, you might as well do it the right way and provide a really good product and as much information as you can, and then be there afterwards for when the person that's really serious and wants to do it right can come to you and now has an outlet to ask questions. Or I can say, oh yeah, you know what, you want to learn how to recon stuff? Talk to my guy Greg. He's going to show you exactly everything you need to do. He's successful at it, and that's what you get from it. But yeah, you definitely the technology piece is coming over and taking, like in Florida, there's no in-person classes at all anymore, right? So most states is going that.
Well, that's kind of my thing too. Is I love in person stuff. Like I've always been a relationship guy, and and like you said, the in person experience is a lot better. That's what Terry loved about it, is because he would take a 4 hour presentation. It'd be 8 hours because the people are asking questions. He's educating them, helping them out. And that's the thing about what I've created too, is it's that experience where you're just getting the business, you don't know anything about it, and how do you learn, right? Because once you've gone through the process of what you do, which you got to have that foundation solid, is if you don't have there's two things that I say in the car business. So they're going to make you or break you. It's your books and your buying. And your books is what I kind of have everything fall under that umbrella. Insurance, bond, your accounting, your taxes, your titles, all that aspect of it, right? That's what I consider books. And then you're buying. Like if you don't know how to buy a car right, you're cooked.
So it's like
So
anything else. You get the money when you buy it, not when you sell it. You know, it's like
100
anything.
everybody has the misconception that it's sales, 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 sales. But here's the thing: if I buy the car right and I own it for a price that I can sell it at a price that beats my competitors, and I can still make a profit, the public
Easy.
public doesn't care if it's Eric or Greg. They care about, is this the car I want and who's got the best price.
Correct. It's also a
So
thing that's a little bit of a generational thing. You know, the older, I would say even my generation and older want that in person, want that interaction, this kind of thing. You know, the younger people that are coming into business now, they don't want that. They want to get it in, get it done. They want, and until they realize that they need it, right? They don't want it, right? So you got to kind of meet them where they're at to some extent and then bring them along the way over time. And at the same time, making your own product offering, the education piece, whatever it is, better to where it's kind of marrying both worlds.
well, here's what I like to say: AI is not going to replace the human experience. You know,
Yeah, most people.
yeah. I mean, until like when I go to a car auction and I sit in a car and I'm sitting in it, I see it, I smell it, I touch it. Like AI is not going to replace that. At least not that I can foresee in the future. You know what
Not
I
for a
mean?
while.
And that's a big difference between me having a conversation with you and you guiding me and educating me based on your real world experiences and the longevity of however you've been doing it. AI is still just AI. It's learning from whatever's been put into it, but it hasn't been out in the
Absolutely.
auctions for 30 plus years. You know what I mean? Like having the real hands-on experience. And I just think I think things will shift back more towards that. You know, where the online courses, like you said, it's kind of you have to do it now, but there's definitely, like you said, there's more value in the in-person experience, and I think that's what makes, like, even what you do more valuable, because you're accessible still. People
Right.
can talk to you and call you and have conversations, versus I'm going to take this online course and then I'm going to sign up for my insurance online and then I'm going to go go try to do business, right?
I'll do the online thing, but you got to seek out people that have the knowledge that can afford you to be able to be successful. And I get calls every day. I mean, the deal schools are somewhat autonomous, right? They don't necessarily need me to operate because it's online. But I get calls every day from people that, the person at the DMV is telling me this, or this. Is that true? I'm like, no, that's not true. This is how it actually works, But so a lot of times you'll get that where people will call in and like say they're accessible to where I'll pick up the phone, and if I know the answer, I will explain and tell the person how to do it and what to do next. If I don't, I'll say, okay, here's the person you need to call because they definitely know. And this is how you got to operate. And this is what you got to do. Right. And so I think ultimately the online stuff is never going to go away. Right. It is, it's here to stay. People that are trying to make it go away, it's never going to happen. Ultimately, what you need to do is be able to marry the two together, the in-person stuff with the online stuff, and have people interact and have people have that human touch and that socialization piece of it, which is, I think, crucial to being successful just about anything, right? Even at the auctions, right? We go to the auction pretty frequently, and I remember, like Manheim, Central Florida. I don't know the last time you were there was, but that place used to be busy, lots of dealers there all the time. And the Manheim now, over the years, has been pushing people online, online, online. They don't want people walking around a lot and doing stuff. And I think that's a disservice to dealers that don't do it because then you don't get to meet Bernd. You don't get to meet Eric. You don't get to meet these people and talk about the things that you don't know.
Well, there's and yeah, I've learned more. Here's the thing, like you said, when you have that human interaction and you see guys at the auction and you're having those conversations and hey, did you know about this? Like I've learned so many tricks and so many things from guys that I know of like repairs on cars or hey, did you know that there's a factory recall on the transmission of all those cars? I remember talking to a buddy of mine at the auction, and he bought a Nissan Altima. And I said, dude, what are you buying that car for? Those transmissions are all bad. He goes,
Yeah,
Nissan factory recall, and I put a brand new one in it for free. I said, are you kidding me? Dude, I made so much money on those cars because nobody else knew it. But if I wouldn't have, seen him at the auction, seen him buy the car, had a conversation with him,
yeah.
dude, I'd have never known. You know what I mean? Just that one interaction made me hundreds, thousands of dollars. It was crazy.
Yeah, yeah. I think, like I said, I think that's where it has to be. I think ultimately at least marrying of the two, the stuff that can be, learning the rules and regulations can be online, because you're just literally learning about the actual laws and the rules and so forth. Right? But learning the operations of the business, how to be a successful dealer, I think those things need to be more of a personal touch. You got to talk to people and figure out what segment of the industry you're going to try to be successful in.
Yeah, I'm looking at creating a weekly group call for the dealers, and I was just thinking about that. That may be something I have you pop in there maybe like once a month and give a talk to the guys and answer questions and stuff.
Of course, anytime. Yeah.
Yeah. So let me ask you this. You're doing the dealer schools nowadays, and how many, you got 7 of them? Like yeah, how many people are coming through on average a month? And what does that typical person look like? Is there any kind of commonality? Like who's the person now looking to get in the business?
Okay, so first question was the numbers on a monthly basis in Florida, new dealers. We probably deal with like maybe 70 and 75. We're not the only ones. There's other people in Florida offering as well. Only 75 or so people that are new coming through every month. In Utah, it's probably 30-ish. Utah's a much smaller market, but about 30-ish probably coming through a month. In Missouri, I think it's somewhere around 15 to 20. So what's that? That's 100, let's say 120. In North and South Carolina, there's anywhere from 30 to 40 a month in each state. So that's another 80. Let's call it 80. Well, that's 200 dealers probably new every month that we're interacting with on a pre-licensing education basis. On a continuing education basis, we're probably talking about like 300 or 400 a month, maybe more, maybe 500 that are coming through continuing education every month. So the new dealers, there's a couple that I often see. I see the guy that worked for a franchise dealer for a really long time, probably made his way up in the dealer group, and something happened, and he thought he was just going to go out on his own and do anything. Those guys all the time. I see those guys a lot. The other type is the person is new to the country, like they're from South America or Middle East or wherever. They're an independent new in the last probably year or 2 years, and they're looking for a way to just hustle and have ability to just make some money, right? And so those guys come through pretty often. And oftentimes they last. Oftentimes those guys don't go in and out. I mean, you see some, right? But more so than normal stating. And then the third group is just a young person, like 20, 21 years old. Probably saw somebody on a YouTube video saying how you selling cars and tried it, found out that they were doing it legally, and then decided to come and get an idiot. Yeah. They were probably like curb stoning or skip titling or whatever the case may be. You realize that they got busted and they got in trouble because it's illegal to do that. And then they came to the class and came through correctly. The state doesn't necessarily endorse us, but because we put so much energy and effort in doing it the right way and in interacting with the deputy chiefs and the bureau chiefs of all the different state DMVs and so forth, the licensing bodies, a lot of times they'll say, hey, here's the options. These guys really know what they're doing. Go to there and we'll get them legal, so to speak. Those are pretty much who we see.
Explain that for the audience, because that's kind of my target too. Is the I've got a 20-something-year-old that I'm mentoring right now, and then I've got another one that I'm gonna do like an internship this summer that's actually in high school, that actually got in trouble. I mean, his buddies are doing a little,
Get
curb
title.
stoning and jumping titles. So
Yeah.
kind of explain curb stoning, jumping titles, just kind of explain that a little bit to the audience, because I'm sure there's a lot of people that are going to watch this that are doing this that don't know that they're doing something illegal, right?
Right. Curb stoning is a problem. Usually you don't have a dealer's license and you're getting a car, whether you're working under somebody else's dealer license because somebody said, oh, they don't let you work on mine, buy a car from you or whatever. You just put them out at like a Walgreens parking lot or some gas station or something like that, and you just put it on the side of the road and put it for sale, $5,000 or whatever, right? That's curb stoning, right? Vehicles are supposed to be held for sale on your lot, right? You can advertise them online and do all this kind of stuff, right? But they're supposed to be for sale on your lot. And so, oddly enough, you think of curb stoning like in a physical sense, like on a curb side of a road. But more so, I think nowadays that curb zoning is done online, on like Craigslist or on OfferUp or on Facebook or whatever. You're just throwing up the vehicle for sale. It's usually in some random driveway somewhere. You know it's a curb zoner because there's no license plate on the back of the vehicle, right? They know that they're selling it that way. But that's illegal because you're not reporting anything to the state. You're not. There's nowhere for that customer. If you do something wrong to that customer, there's nowhere for that customer to go back to be made whole, right? Because you're not a licensed dealer. You probably have a burner phone that you don't even really use. It's just for the cars. So that's a problem. Skip titling, or or jump title, skip title.
We call it jumping titles.
Yeah. So there's a couple things there. Essentially, what you're doing there is you're getting a vehicle. Let's say, I have a vehicle in my name and I'm selling it to you, right? But you're not a licensed dealer. You say, oh, just leave the buyer's name blank. I'll write my name there. I don't know if we're going to do my wife's name or my name, or we're going to do something maybe my business.
Don't put any price on there either.
Yeah, don't put a price, don't put anything on there. Just sign it. Here's the cash, and we're good to go. Well, there's two problems there. Number one, that title is still in that customer's name and that person's name who sold the car. So if you go, or whoever has the car now goes and wrecks it and causes an accident, guess who's liable? The other guy that didn't sign the title over to a person, right?
That's
So that's
another thing that I think people are completely unaware of. When you don't sign that title over to somebody, you're still on the hook. So
yeah,
if they go out and rob some banks and shoot some people and crash the car and run over some kid and kill somebody,
yeah,
you're on the hook for that.
that's right. It's your car still. You own it technically still, so
It's
you're on the hook.
legally still registered to you.
Exactly, exactly. So you got to make sure that that's done correctly. If you're a consumer watching this, make sure you sign it, you put the price in, and you put the name of the person, and make sure they sign it in front of you before you hand over the title and complete the transaction, right?
Make a copy of it, keep
Yeah,
it.
take a picture, right? So there's that. The other issue is it hurts all the license dealers out there that are doing it the right way, right? Because if you're a licensed dealer, not only do you have overhead, you got to pay your rent, you got to pay all these things, you got to pay the fees at the auction to get your inventory, right? You have to pay to advertise it, you got to do all these things. It's hurting all the dealers that are doing it correctly. That most of them are small mom and pop shops, right? Most of them are not, your hollers and your I don't know, your AutoNations and all these guys, but yeah, and most of them are small mom and pop dealers selling 5, 10, 15 cars a month. And so they're being harmed by that. So both the consumer can have a problem with it and the industry as a whole gets harmed because of it.
Well, the other thing too is, when I was explaining to somebody the other day, as a dealer, when you have a license, you're allowed to um, jump titles technically, but legally. So if I buy a car from you and you assign it to me, Campbell cars, I don't have to go register that car in my name. Me as the dealer, I can then reassign it to either the individual I sell it to or the next dealer. If I sell it to another dealer and they want to sell it to another dealer, they assign it to the next dealer. And you have to have your dealer license to be able to do that. If you're an individual and you want to do it legally, if I want to go buy Eric's car, they would have to sign the title over to me. I would have to go tag that car, insurance, tag it, insure it, pay the sales tax on it, pay the property tax, get the title back in my name. That would be legally, and then I could sell it or do whatever I wanted with it. So by jumping titles, not only you know, you're putting the consumer, they're putting them at risk, but also you're avoiding paying taxes, which, who
Yeah.
wants to get in trouble for not paying taxes, right? And
Yeah.
then top of it, you're not insured or anything. So
Yeah, it's a big problem. It's never going to necessarily go away. You should at least know the risk of what you're doing if you are doing that, that there is significant risk there. And you may not ever get caught and you may not have a problem. And everybody will, somebody will, and it's going to mess you up. So might as well just do it the right way.
yeah, the younger kid that I was just talking about, I was talking to his dad. And him and his buddies did it, and they got in a wreck or something. And he was telling me how much money it was costing him to pay the attorney to get him out of the mess. It was just a big deal. But you know, once again, going back to kind of my purpose and what I've created is I started out that way myself. You know, I started out working under some guys and flipping some cars. Back then, we used to sell them out of the driveway. You know and I never jumped titles. We legally did the paperwork, but what we were doing that wasn't right is we were selling them out of the driveway out of our house instead of selling them off the lot. But but yeah, I think it's a great business for younger people. Like I'm glad to hear that you got like the 20 somethings coming through, because those are the people that I'm looking to coach and mentor, because there's, like I said, when I started there was the right way and the wrong way. And you get very tempted very easy to do things the wrong way, the easy way, the shortcut. And it's you may get ahead faster, but you're not going to be able to last. Eventually,
So that's the thing.
it's
You
going to
know what
come
you're
up.
doing.
Yeah, it's going to
Yeah.
bite you in the ass.
Yeah, quick money is always going to come back around. If you're making quick money, you better get out of that soon because it's not going to be quick very long.
Yeah.
You better look at it quick. No, I agree. The interesting thing is that the younger guys are always coming in and they're using technology, right? And it's kind of interesting that I talk to a lot of them and hear how they're operating and what they're going to be doing. And there's a lot of little tools, but I mean, a lot of the AI stuff is just not really AI. It's just kind of overblown. That somebody's just putting the letters AI on the back of the word or whatever. But these guys are using technology really to their advantage, and that's kind of interesting to see. Still, you want to do it the right way, right? You don't want to spend all your time and energy doing something and then figure out you're doing it the wrong way, and then now you got to start all over, right? Where you get yourself into a problem, and now you can't start over because now you committed a felony. Like now you can't get a deal on this, right? So
So you're on the dealer school side of it. So you're seeing the new guys come in. You're seeing you're selling the insurance, you're selling the bond. You got to have that every year to be in business, right?
mhm.
So you kind of see the people coming in, you kind of see the retention. Is there any kind of thing that sticks out, like the percentage of people, let's say, that fail or don't make it in the business? And then what's kind of some commonalities, maybe some issues of why that happens? Because here's the thing, I did some research on this, with Terry, with you, with some other people, of like how many dealers are in the state, and then how many go, what's kind of the churn rate a year. And I was looking at like why is that? What is the common theme of why so many dealers go out of business every year? What's your insight on that?
I think there's a couple of reasons. One is they get this in their head that this is going to be a passive income. You're going to sell one car and put online and sell it and sell itself as do its own thing. You think it's going to be passive and not have to really work at it. And that's not the case. If you're going to be a successful dealer, you're going to work, right? And everyone that I know, they work. right? And they're hustling until the point where they can have other people duplicate their efforts, right? So that's a very common one. People don't realize the amount of work. They think they're just going to go to the auction, buy a car real cheap, and turn around and sell it the next day or whatever. Not going to happen that way. And so a lot of people go out of business because of that. They realize how much work it actually is. And so once they realize that, they're like, no, that's not for me. And they move on to the next thing. Another common one, which I try to coach people all the time not to do this, is they get in hot and heavy from the very beginning. They're getting their dealer license. They got a location that's like $10,000 a month in rent. Then they're going to have 200 cars on the lot. And they don't realize how much overhead they're putting themselves into. And if they don't sell those cars, they're going to have a problem. And so I help you the same way. Start walking, crawl. I one car.
Crawl, walk, crawl.
One car, you know? And if you do that, okay, now Steve needs like 3 or 4 cars or 5 cars, you know, and then kind of just build up into it and step into the bigger dealership, you know, find out if this is what you want to do in the first place. The other one that I see a lot of times people get in trouble is because they don't have their money right? And they don't have, maybe they have, because to get a dealer license, if you got a reasonable location, we're probably only talking about dollars all in just to get in business. So it's really not a lot of barrier to entry there, right? But then you need money for inventory, and then you need money to turn the inventory, right? So a lot of times, then they'll get hooked up with Next Gear or one of the other, the AFC or Porch Plus or one of the floor plan companies. The floor plan companies only can be a great tool to use if you know how to use it right and you have control of your own. You know what I mean? But if you don't, you can get yourself into a problem real quick with curtailments and all these other issues that pop up. If you're not turning your inventory, you can get yourself into a problem real fast. And then you go down the rabbit hole of making bad choices to try to get yourself out of the hole. And then you say, oh, well, I want to sell this car, out of trust. Problem there, right? Or you're going to sell a car to a customer that you probably needed to work on first, and now they're going to have an issue, and you're going to have a one plan. Or you're going to lie to a customer just to move that car, what it's going to be. They didn't turn out to have a claim on your bond. The point is they're getting into positions not being in control of money. There's people out there, floor plan companies aren't the expert. You're the expert. If you qualify, they're going to give you the money. And if you buy a Dodge Neon for $20,000, well, they're going to give you the money. But you're the expert. What are you doing paying $20,000 for a Dodge Neon? You know what I mean? I think that's the biggest thing that causes people to fail. The 3 things. Number 1, they come in hot and heavy too fast, whether they have money or not, and there's some realists that it's going to take a lot more money than they think. The second is they think it's going to be a quick and easy job. I can do this on the weekends as a retiree, and they realize there's a lot of paperwork, there's a lot of things you're going to constantly do and be doing to make this work. And then the third one was just they really don't know what they're doing, right? They've never sold a car before. They don't know how to sell a car. They don't know how to run a business as an operation. And an employee long term. It's not to say a bad thing, but they really need to spend some time and energy getting some education on how to operate a business before they go just jumping into the business. I think those are really the 3 things. Because you see the guys that last, right? It's not because they're the most interesting person in the world or anything like that. They can get over money, right? And they know how to work hard. That's really what it comes down to.
That was always, I'm not the smartest guy in the world, never claimed to be, but I always have stood on my work ethic, kind of growing up in the country, growing up on the farm. I can outwork anybody. So it's kind of almost like it was a good thing and a bad thing because I work 7 days a week. When you talk about car business, it's 12, 14, 15 hours a day, 7 days a week, because you get out of it what you put into it. So I was like, all right, work ethic, I'm good there. I'm going to outwork everybody. Money management, yeah, that's a big one. That's definitely a big one, And then when you get into a floor plan, if you don't use it, it's kind of like credit cards or anything else. It can be a trap. If it's not used properly, it gets you in a bind. And then not knowing what you're doing. You got to get in there and learn everything and figure it out that you didn't know. It's kind of like jumping out of a plane and building a parachute on the way down.
Not trying to put the parachute as you're flying.
Yeah, it's not jumping out of the plane and putting it on. It's jumping out of the plane and trying to build it as you're going before you put it on. But yeah, that's a big reason why, like I said, I created, my program is and that's what, it's buying and reconditioning cars because, like I said, money's made in the buy. But then all the other pieces that we talked about, I'm looking at doing, collaboration with you and working with you on some stuff because I realize, yes, it's buying is very important. Like it'll make you or break you, but all these other things we've been talking about, those things can make you or break you too. So we need to put that whole package together. You know,
I think just getting a path, getting a plan is kind of the biggest hurdle for people. They think they just, it's like a ready, fire, aim, right?
yeah,
You need to get a plan, kind of understand at least a basic plan, what you're going to do, how you operate, what you don't want to do, what you do, you know what I mean? And then start iterating as you go down the path. If you don't do anything, if you just jump into it, you're gonna.
yeah. And it's like you said, find that one thing, figure it out, and then do that thing, repeat, repeat, repeat. I figured out my one thing. It's buying cars, reconditioning cars. I'm not a retail guy. Every time I try retail, I lost my ass.
There's
So
been
I
a couple of times that I've known you, they said, "Oh yeah, I think I'm gonna start doing retail." Within a month, you change your mind every time.
and I'm
Yeah,
like, okay, I was temporarily insane.
yep, yep, yep.
But yeah, that would be my biggest advice, just like you. If you're going to get in the business, start out slow, get a mentor, find somebody that knows what they're doing, and you can work under people's licenses. I would say that like the guys that I want to coach and mentor, especially those 20-something guys, get under somebody. That's how I started. I got under my mentor's license. I paid him so much a car for each car that I sold under his license. But kind of the program that I've laid out is even if you just want to do this part time, like you said, see if this is even what you want to do or if it's, to get your feet wet. You can work under somebody's license, do this on the side, and your goal would maybe to be do your first car, right? Buy your first car, recondition it, sell it. Have that experience. Okay, what went right, what went wrong? And then go buy your next one. The biggest thing problem is like you said, they get a floor plan or they're all coming in hot and they want to go buy a bunch of cars, and they think going to auction's fun. Dude,
Yeah,
the auction is the biggest amount of work. When you do it right, you'll do nothing that's more work than the auction. The auction's not, and that's the big misconception. But yeah, do one car, go through that experience, then do the next one, then do the next one, and then buy your fourth or fifth car. If you got it kind of figured out, then you may be like, okay, I want to do this full time. But that still doesn't mean go out and get a big floor plan and a big overhead and a big lot because I've been wholesale my whole life, pretty much. The only two times I lost money is when I did retail. That's because I had crazy overhead. Because when you have an off month and market crashes or the economy crash, anything that happens, that overhead doesn't stop.
right.
I
Yep.
think that's what people don't understand. The banks, they still want their money. The floor plan still wants their money. The insurance company still wants their money. The landlord wants their rent. And you would be surprised. People think, oh, well, rent, insurance, phone bill, that's it. Every time I sit down and look at my expenses, I'm like, how are my expenses 10,000 a month, 15,000 a month?
I'm on the same page, man.
I'm like running like I have
I
the
wish my
lowest,
expenses were 10,000 a month. I
I
wish.
have the most basic nothing in my life, and my expenses will still be 10 to 15,000 a month when I was just running by myself. So you get an overhead, you get a little bit of a lot, you get anything, you're 25,000 a month in overhead. So that means now you got to make 25,000 in profit. You don't have to. It's not we're selling $25,000 worth of cars. You got to make 25,000 in profit just to break even.
Yeah, just to cover your nut. Yeah. Okay.
Yeah.
So, so you're in the business for a long time. Uh, where do you see it going? Like, so there's a lot of talk out there about autonomous cars and people not needing to own cars, or even just inventory issues. Where do you see it going? Do you see an issue a bit in the future where more manufacturers are going to try to go the way of Tesla, where they're kind of controlling their ecosystem and they don't use a lot of used car dealers for their inventory?
I think, yeah, this is the direction that I'm seeing things headed is the franchise dealers. I said this long time ago. I said eventually it's going to be franchise dealers and buy here, pay here dealers. The small mom and pops and those like they're trying to wipe those guys out. They've been trying to do that for a long time.
Yeah.
And the franchise dealers are making the cars nowadays to where you can't work on them. You got to take them to them for service. You got to take them to them because the computers, nobody has access to the software, and then also I think they're trying to make them like iPhones too. Not only that, they're the only ones that are going to be able to work on them, but they're going to be, hey, you got to get you a new one every 3 years, or whatever the case is. How that plays out, you know, how many years that's going to take, I don't know. I mean, it's already in the works. But what I see is people need affordable cars. They're always going to need affordable cars. So I think that's like what I've said is, I've been in the business 34 years, been through a lot of ups and downs, and I'm like, man, now is probably the best time, I think, the opportunity to get in the business
Yeah.
for the simple fact of, just like I said, the cheap affordable car is non-existent. The dealers, the franchise dealers that control the market, they're keeping all the nice cars. That's how when people go to the auction, it's all the trade-ins. It's either bank repos, which are completely trashed, or it's trade-ins from new car dealers, and they're only sending their stuff with problems to the auction.
Yeah.
So you have a market now where people can't afford $800 payments anymore. They can't afford the 400 or 500 in insurance. They can't afford, you know what I mean? So they're needing a cheaper used car. And the thing about it is, there's no nice, cheaper new cars. They all need something. So that's why, like, for me, what I do, dude, I turned down work. In the beginning, I used to have to beg guys to do business with me. Now I
Mhm.
get calls all the time and I turn them down. They're wanting my cars, because when I buy a car and I recondition it and I get it ready and they don't have to mess with it, that's back in the day, dude, you could just go to the auction, you could buy nice cars all day long because there was just the supply and demand. And new car stores back in the day, they wouldn't keep a car that had over 50,000 miles. I see new car stores nowadays, they'll keep cars with 300,000 miles on them. If they're nice and the customer serviced them in their shop and they're good, they're clean, they don't care. So that,
Mhm.
it's taken all those cars out of the market. But like I said, with the financing, with the buy here, pay here, that's made the cheap cars price go up because there's a demand for them because that's the cars they need to finance. So that takes out the mom and pops. And then the individual dealer now doesn't have the bank financing either. Only the franchise dealers have the really deep financing options. And so yeah, so I think that's kind of where it's at. And like I said, eventually, I don't think the buy here, pay here is going to go anywhere. But I think the middle guy, they've been trying to cut out the middle guy forever, and they're doing a pretty decent job at it. And then it's definitely shifting to, we're going to capture you completely, the franchise store, to where you got to buy it from us, bring it to us, maintenance it, trade it back in. That's what I see happening.
Yeah, it's interesting. I've looked at like some of the newer brands like the Rivian, the Tesla. What's the other electric? The one that competes with Tesla. They don't really do a good job of competing. But it was the people came from Tesla. I can't remember the name of the car right now. They make a couple of different ones. They make like two or three models. But all of those guys, all those manufacturers are direct to the public. They don't use an AutoNation or a Holler or Courtesy or whatever the franchise fan made group is. So I'm wondering if over the time, like, if I was Ford looking at that, man, why would I use these guys? Why don't I just go direct,
Well,
You think it's going to be the case? You think the franchise is going to keep them out of it?
that's the electric cars.
Yeah.
That's a whole nother subject because I knew when the government started putting their hand in that with the electric car thing, I was like, dude, this is gonna be bad. Because the whole reason they were doing it wasn't even really effective in the big scheme of things. And when you force people to do something, you know, that's the whole thing about, choices. Hey, if Chevy's making a good car, I'm gonna buy a Chevy. If Ford makes a good car, I'm gonna buy a Ford. But when you incentivize and basically force people, manufacturers to make the electric vehicles and then have people buy them, that's never a good thing. But I seen that, you know, here's the thing. When they first started out and they kind of did that direct to consumer type deal, I think that kind of works in the beginning because, it's pretty much a brand new car. But, you know, think about a new car store, how they make money. They make money in service, they make
Service
money
and
in used cars, they make money in parts, they make, you know what I mean? Like selling new cars, they really don't make money in selling new cars. They make money in all those other areas. So I don't see where they'll shift to that model of, hey, you're just gonna order a new car and it's gonna be shipped to your house and the dealerships are gonna disappear. There's no way that's gonna happen.
yeah, yeah, you're probably right. I think there's too much money behind the dealerships for that to happen. Yeah, well, the other company I was thinking is Lucid. Lucid, yeah.
Lucid, yeah, yeah,
Nice car, but not doing as good as
yeah.
obviously.
I'm not an electric car fan, but I got the same question for you. That's always in the news a lot lately about insurance is so crazy on cars. In the last year or so, the insurance has gone up. I know me, even in dealer insurance, 10, 15 years ago, there was tons of
Yep.
carriers and tons of people you could get insurance from. And now it seems like it gets smaller and smaller and smaller. What do you see in the next
So it's
future
happening.
of
Yeah, it's
insurance?
happening for a couple of reasons. First of all, insurance, I think, kind of peaked out and increased in premiums, right? There were for like a year, every other month, the Atlantic Casualty or whatever insurance company was like, oh, we're having a 20% rate increase starting next month, or whatever. Rates just kept going up and up and up. I think part of that is because vehicles are more expensive, so claims are higher, right? I think the other part of it is the rest of everything else in the world kind of caught up to them. So for insurance companies, who operates them? People, right? And they have to make a rate of return. And so inflation happened initially there, but didn't really hit their bottom line until a year or two later. So then they realized, oh man, we have all these increases in payroll, all these increases in claims, all this stuff. We need to increase rates to kind of get back to where we're supposed to be because they got to make a set amount of return, right? I think that was part of it, right? They didn't really increase rates immediately. They kind of took the hit and then eventually just raised the rates once they saw everything level out. And I see that the rate increases have kind of stopped. It's not really going up as much as it used to. The second thing is over time, when I first got into this, well, there's two types of insurance companies, right? There's admitted carriers in each state, and then there's excess and surplus lines carriers in each state, right? To give you an idea, most states personal auto insurance or homeowners insurance is usually required to be written by admitted carriers, and then commercial type of insurance is usually written by excess and surplus carriers. And there's a very specific reason. Well, first of all, the difference in the two carriers, at least in Florida, is admitted carriers pay a fee essentially to be a fee in monetary and, in my opinion, a fee in the ability to change their policies and their what they insure and don't insure and so forth for the state. And then in turn, they get to be part of the state guarantee fund. The state guarantee fund is like a backstop. If an insurance carrier goes out of business, the state guarantee fund will step in and pay out a percentage of the claims for that carrier. Not all the claims, but a percentage, right? And that makes sense on like homeowners. I get it. That makes sense, right? A hurricane comes through and wipes out, billions of dollars worth of insurance. That home insurance company is probably going out. And so they need the state to kind of step in. That makes sense. But in the more specialty kind of insurance world, let's say for dealers, for example, there used to be a few admitted carriers, 4 or 5 of them, Zurich, Occidental Fire and Casualty, a couple of others that would write used car dealers as an admitted carrier. The problem is the state will not allow them to change rates and do things to increase premiums to cover up potential claim issues or change who they will cover and who they won't cover. They're kind of locked into what they filed with the state and they can't change it. Make sense? So when they have claims come in for, let's say they have claims come in for, people that are under the age of 21. And so they no longer want to write people under the age of 21, but they can't do that. Unless they filed that originally they can't change it. Conversely, excess and surplus lines carriers that are still financially stable, they're still strong, they still are licensed and so forth to be an insurance carrier, they're just not part of the state guarantee fund. So in turn, they charge you taxes. That's why on your insurance policy, you pay a state fee, state tax based on the premium of your insurance policy, and that tax gets remitted to the state for the same reason as the state guarantee fund, essentially, right? So those carriers are able to be flexible to change. So when something happens and the whole industry starts having claims for whatever reason, now they can say, okay, well, anybody that has those kind of cars or dealing in this kind of business, maybe you're an exporter and you're having all kind of claims with exporters, you get all exporters rates increased by 20%. They have the ability to do that, whereas an admitted carrier, you do not. So the excess and surplus lines carriers then are able to stay, whereas like Occidental Fire and Casualty was writing, for example, everybody could get wind, hail, and flood coverage. Well, then a hurricane comes through and wipes all these dealers out, and now Occidental Fire and Casualty can no longer insure dealers because they paid all the money now. So now they're gone.
In the Midwest, it was the hail.
Hell yeah.
Yeah,
So
I
conversely,
couldn't get hail insurance anymore.
then you still get insurance. You just got hail exclusions, right?
Yeah.
So you can the surplus lines carriers will exclude those storms, and some of them will give it if you are willing to pay for it. But they'll exclude those storms, and they're able to still insure you. So most of the time, the way it actually happens is that the admitted carriers will ultimately go out of business because they can't get the rate increase that they need to stay in business. Whereas the surplus lines carriers can just change their rates next month, and this is what we're charging now. And everybody now that renews is going to be based on this rate. They can get the rate that they need to stay in business. So almost all of the surplus line carriers, they almost never ever go out of business, right? Because they're able to change rates. In addition to that, most of them are owned by, like, for example, Atlantic Casualty, who writes most of the used car dealers in the United States, right? They write a huge percentage of them, right? They're owned by Auto Owners Insurance. Auto Owners Insurance is a massive insurance carrier that does all kinds of stuff. So they're still a good quality company. They just have the ability to move left or move right based on what they need to do to stay in business and write the business profitably still.
That was something that I was curious about, because I'm like, I was getting the feeling as the choices kept getting smaller and smaller. I was like, what happens the day that these insurance companies just across the board are like, dude, this just isn't profitable anymore. We just don't even want to touch this. These car
Oh,
dealers, these car dealers are a nightmare. What,
it
you know,
happens all the time. It happens all the time. So every few years, rates go up like they just did, right? So rates have gone up. And then what happens is some insurance guy from, I don't know, Idaho or whatever, wherever they're at, right? Sees that happening. So they hire somebody away from Atlantic Capital. They hire somebody to run this new dealer business they want to create because all the rates went up. So now they see that they can go in and charge a cheaper price, undercut the market, get a whole bunch of business, and then they operate that way and they take that business from like Atlantic Casualty or whatever other company. But then what always happens is within a couple of years, they bought a big portion, big share of the marketplace by lowering the rates. After a couple of years, they start having claims and realize that they can't do it for that cheap, and they raise the rates, right? Or they just stop writing altogether, and then all the business goes back to Atlantic Casualty. That's every couple of years it happens. It happens. It's almost like clockwork, right?
so
And
you don't see a issue or a time where there's just
no,
going to be nobody that wants to write car dealer.
no, not in Florida, not in most states. There's a couple of states where there is an issue right now. California is having problems. Colorado is having problems, and Kentucky, and that's because they've changed rules and laws to where, like, let's say your liability limit is $100,000. Well, a judge can now award somebody $1 million, and the insurance company has to pay it, even though your limit was only 100,000. Some laws and rules that have happened over the last 3 or 4 years that have messed things up, and so some insurance carriers will just say, no, we don't want anybody from Kentucky. If you're even driving through Kentucky, we won't insure you. Like, so it's become like that. Then you got some places like in Missouri where there's like small regional players that will insure because they know the industry, they know the market really, really well, and maybe they're connected somewhere in halls of the state legislature, right? And so they'll kind of stay in the marketplace. But the big guys just stop doing it. They don't play. The state wants to be dumb and make rules that don't make sense, then they'll just stop running altogether.
Well, cool, man. I'm gonna wrap it up. Dude, I appreciate it. Like, so much knowledge there. Anybody watching this, definitely uh, can learn. I even learn myself. I appreciate the time. So if you are name off your states and how can, if I need insurance, if I need a bond, if I need a dealer school, uh, give me your info for the audience. How do they get a hold of you? What states are you in? And your website, social media, anything you got.
So the easiest way to go about that is we'll write pretty much bond and insurance and name the state. There are a couple states that are harder than others, but you can go to our website. It's Quicker Bonds, bonds.com. The company name is All American Bonds and Insurance, but our website is quickerbonds.com. So you can go there, you can apply online. It'll come to us. Somebody from my office will call you, whether you fill the application out online right or not. Someone is going to call you and go over with you. So no need to stress about that. As far as the dealer schools go, each one has a different name, so I'm going to rattle them off. But if you Google in your state, the dealer license education will pop up, right? And do it that way. And then obviously we send out emails constantly to everybody. We are very, very aggressive in business, and we email and call people from every state all the time. So if you hear from us, you got the phone, give us a second chat, and if you don't like us after that, that's okay. We don't have to be friends, but
Yeah,
we'll have to.
I'll get the links and I'll put the links in the in there so people can get to you. Yeah, that's a main thing because not a lot of insurance guys can write all the states. So, we're gonna have people watching this that are gonna be all over the country. Yeah, insurance is normally a pain
It
unless you
is.
got a guy like yourself that handles it. So yeah, so if anybody needs insurance, doesn't matter what state you're in, reach out to my man Eric. And yeah, brother, I appreciate you. Look forward to the things we're going to be doing in the future and helping people out.